Molina Healthcare MOH currently trades at approximately $221.50, presenting a compelling buying opportunity due to a combination of strong fundamentals, undervaluation compared to peers, and resilience against macroeconomic headwinds such as tariffs and potential Medicare cuts. First, strong balance sheet and net cash position. Cash and investments $9.6 billion, total debt $3.7 billion, all long-term, approximately $6 billion after debt payoff. This means the company could eliminate all debt and still retain significant cash, showcasing a fortress balance sheet. Undemanding valuation. Approximately 10x at midpoint of 2025 EPS guidance, $22. This is significantly lower than the sector average of 13 to 15x for managed care peers like United Health and Humana. EV/EBITDA, about 3.3x, far below the sector average of 10x, indicating substantial upside potential if the company re-rates to peer multiples. Resilience against macro headwinds. Molina's operations are largely domestic, meaning tariffs on imports have minimal direct impact on its costs or revenue. Medicare cuts, even under a worst-case scenario of a 4% Medicare reimbursement cut, the EPS impact would be around $3.30, leaving the company still profitable and undervalued. Earnings and growth outlook. 2025 EPS guidance, $21.50 to $22.50, reflecting conservative estimates and potential headwinds in medical costs. Revenue growth. Strong premium growth with Q1 25 revenue up 12% year over year, driven by Medicaid and marketplace expansion. Risks and watch items. Medical cost ratio. Recent uptick in medical costs is a key watch point. Stabilization of MCR in the next 2 quarters is crucial. Rate adequacy in Medicaid rebids. Competitive rebidding cycles for 2026-27 could impact margins. Capital deployment. With a strong cash position, the focus will be on how Molina utilizes its capital for buybacks, dividends, or strategic acquisitions. Molina Healthcare offers a unique investment opportunity with a strong balance sheet, an attractive valuation compared to peers, and resilience against macroeconomic.
What do you believe is the correct fair market book value currently?
To get a current fair market book value, we need to look at Molina's net assets, which is essentially the difference between the company's total assets and total liabilities. Net cash position post-debt payoff, we have about $5.7 billion in net cash after paying off all debt. Equity value, the fair market book value would also consider other assets and liabilities on the balance sheet beyond just cash and debt. Without the exact balance sheet in front of us, we can estimate using the company's recent financial filings. Recent equity data, as of the last quarter, Molina's total equity assets minus liabilities was around $4.2 billion. Adding the net cash position after debt payoff, the adjusted equity would be approximately $5.7 billion. On a per-share basis, with about 54.1 million shares outstanding, this would yield a fair market book value of around $105, $110 per share, assuming the rest of the balance sheet remains stable. Conclusion, the fair market book value, considering a debt-free scenario and the company's strong net cash position, suggests a solid foundation and a potential upside from current trading levels. This reinforces the idea that Molina is undervalued and presents a strong buying opportunity.
What do we currently believe is the fair market value as of right now?
Based on our analysis, the fair market value for Molina Healthcare, MOH, can be estimated using a few different approaches. One, earnings multiple approach with a forward PE of about 10x at the midpoint of 2025 EPS guidance, $22. And considering that peers trade at around 13 to 15x, a fair multiple would likely be in that peer range. If we apply a 13x multiple to the $22 EPS guidance, we get a fair value of about $286 per share. At a 15 times multiple, that fair value goes up to around $330 per share. EV/EBITDA approach with an EV/EBITDA of about 3.3x currently versus peers at around 10x. Re-rating to a 10x multiple would imply a significantly higher enterprise value, translating to a fair value in the range of $360 to $430 per share after accounting for the net cash position. Debt-free scenario, if Molina were to pay off all its debt and hold around $6 billion in net cash, the fair value would be further enhanced, suggesting a fair market value toward the upper end of that $360 to $430 range. Final estimate, taking all of these approaches into account, the fair market value for Molina Healthcare right now is estimated to be in the range of $360 to $430 per share, significantly higher than the current trading price of around $221. This underscores the potential upside and makes it a compelling investment opportunity.